A 665-day long RSI is being retested again. Let's dive into the charts and see if this moment will be the bear market defining moment for a break to the upside or a brutal rejection. Okay, MegaWhale team, welcome back to the channel. Thanks for tuning into today's video. I hope you all are having a fantastic day. We're going to go ahead and get stuck into the chart because there's something really interesting happening on the weekly RSI, and that is the 665-day long downward sloping resistance is once again being retested. And the last time we actually retested this level was actually the November top in 2021. If we go ahead and draw this trend line across from this peak, crossing over that bearish divergence, we can see once again we are coming down and retest, or should I say coming up and retesting this point on the RSI on the weekly chart once again. We're going to talk about all of that today later in the video, but first and foremost, let's go through the rest of the stuff. So starting over here, we can see monthly returns of Bitcoin. This is of course something we look at every single day. We'll go ahead and take a look at the monthly. It is at 1.1% negative currently, so we are seeing a little bit of a nosedive at the start of this month. Historically, guys, November is actually relatively bullish for Bitcoin. If you take a look, the worst month we've seen for November was in 2018. That's when we saw a negative 36.57% correction. Other than that, it's actually housed the largest return as well, which is in 2013 November, nearly 500%, and in between we've seen some decent moves around 50% and some smaller moves around 10 to 12% as well. So all in all, November is historically a more bullish month for crypto than it is bearish. It'll be very interesting to see how that plays out this month. Moving onwards, volatility index is still quite low at 1.46%. And we've seen a lot of liquidations in the last 24 hours, the majority coming from Gala, which actually had a little bit of an issue with their pool. I think it was something to do with their pool system. The Gala team messed something up and the price crashed pretty significantly, around 30%, and then liquidated a lot of people in those positions. But overall, guys, the market is looking a little bit more stable today, a little bit better. It's actually corrected not as much as a traditional market. So let's go ahead and take a look at Bitcoin. So Bitcoin did see a bit of a correction, and excuse my scribbling from yesterday's video. We did talk about this in yesterday's video, FOMC. We said, price corrected, we've come down, blah, 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 blah. We saw a little bit of a drop down, FOMC. Basically, we entered FOMC at this price range over here, around 20,500, and we're down about 1.15% since that price point. If we take a look at the bond yields went through a roof. We saw a breakout on the 2-year. At around 4.6, that shot us all the way up. We said if we break 4.6, we'll end up at 4.9. We massively overshot 4.9. We went all the way up to 5.13. Absolutely mental. Looking at the 10 years as well, a nice little pump in the 10 years. The S&P 500 crashed, and when bond yields rise, stocks drop. And we saw the S&P 500 crash actually to a little bit underneath that target. Horrible arrow over here, but a little bit underneath that downward trending resistance, that target we had. We said we'll come up, we push up here, we're going to get rejected from this level, and we're going to come on back down, basically exactly as expected. We can see the Dow Jones is looking horrible, guys. It's not looking good over here. It's come back down, rejected from the area as expected, lost this neckline, is currently sitting underneath major resistance. All in all, the markets are looking on the larger time frame, on the 12-hour, the daily, are looking more bearish than they are bullish right now. They're not looking good. We're under some significant levels, but Bitcoin and cryptocurrency is actually holding really well. Surprisingly well compared to the stock market, and we've been seeing this for the last few months actually. If we take a look ever since September, cryptocurrency is more or less pushed sideways, where stocks have crashed a fair bit still. So where is total cryptocurrency markup? It's come up, it's rejected again from that 965 billion level. It will need to break over that 965 billion level for us to see any sort of push back upwards to this level here. Otherwise, we're going to be heading back down, guys, potentially down to 900 billion, which will bring Bitcoin to around 9,800, potentially even 18,800, depending on the volatility or how that goes. DXY is looking somewhat topped out over here on the short term. Of course, we've come back and we've retested these levels again, up over here, retesting the bottom level, swinging upwards, breaking through the 111 resistance zone, breaking through the 112.3 level, and we still do have this major resistance above us at 113.5. If we do not get above 113.5, the market still can turn around. If we do get above 113.5, it is looking like danger time for the markets, and we're very, very worried about what's going to happen next. Very likely we head down and continue down if that level breaks out on the 4 hour and we get back above it. So keep an eye on that one if you're interested in looking at the DXY. All in all, Bitcoin is looking pretty okay. In comparison to the rest of the markets, Bitcoin is holding up well. At the moment, we are reclaiming certain upper resistance levels that we have retested before. This being this upper range over here around that 20,272 level, which we're currently just sitting above. Obviously, we do have psychological support of 20,000, which we did actually retest numerous times in the last couple days, not failing to get below. 20,000 is now going to be our psychological trigger, which will trigger that collapse down to 19,800, which we all already know 19,800 being that major trigger expressed by this red line, which is basically preventing the price from going back down, or should I say, if we do break through this level, we can expect that drop back down to 19,800. So on the short term, it is looking a little bit sketchy, but it is holding up better than the stock market. And with the DXY potentially reversing, we could see a little bit of hope on the short term for Bitcoin here to push back upwards and potentially revert this somewhat bearish pattern that we're breaking down from. If we do a little technical analysis over here, we can see we are almost developing some degree of a descending channel, quite a rough descending channel, a lot of fake outs to either side, but we'll come back and assess that at the end of the video. So let's get into the crux of it. And the crux of today's video is this over here. This 665 days, guys, 665 day long trigger. And the reason why this is so important isn't because the RSI, as you would know already, if you've been watching the channel, I love the RSI. One of my main trading strategies is using the RSI. I've been using the RSI for 7+ years now. I'm mainly trade based on momentum. So I absolutely love I love momentum analysis. I love momentum. I think momentum is a particularly fascinating tool when trading the markets, and it's actually surprisingly accurate because, a little rundown, the RSI doesn't tell us what the price is doing. It's not really representing the price. As you can see, the structural difference between the price action and the RSI, they're similar. They're similar, but they're not the same, right? We've got obviously bearish divergences here. We have different levels of highs and lows, different ratios between these points of highs and lows. It's similar, but it's different. It shows the overall pattern, but it's a little bit different in terms of where these peaks and troughs actually come in. What the RSI does tell us, it tells us three things: the speed, velocity, and momentum of the price action. And why is that so important for traders? Well, I'll tell you this. It's not the individual data points of speed and velocity and momentum that matter. It's when they shift drastically that do matter. So generally when we see downward trending resistances, such as this diagonal, or we see horizontal resistances, which we can go ahead and find one over here real quickly, a nice horizontal resistance over here, or support, whatever you want to call it, okay? When we see breakdowns from supports or breakouts of long-standing diagonal trend lines, it represents a significant shift in momentum. And when we have shifts to the upside, so positive shifts in momentum, the price action is likely to follow that direction. Okay, that's quite a large scale thing if you think about that. And obviously each time frame you're going to see different representations of that data, but for this chart we're looking at the weekly. So when we see a 665 day long RSI resistance, we're thinking automatically, well, this could be a trigger, a momentum trigger that could result in the price potentially pushing upwards to retest some key levels that could potentially get us out of this downtrend. Okay, so we're looking at that point. On the flip side, a downwards resistance is a downwards resistance until it is broken, and therefore we have to be assuming that we can potentially reject from this level, and thus where will we go if we do reject from this level? And those are the two questions today. Taking a while to get to it, those are the two questions today. Where are we going if we reject from this level, and where will we go if we break above? Now, before we get into anything else, I'm saying this later in the video, if you're liking the video so far, consider dropping a like, subscribing, commenting, showing your friends, whatever you want to do to support the channel. It all supports the channel, it all helps, and I really deeply appreciate it. It gets my content to more viewers, and it shows me that you enjoy the videos. Also, guys, head down to a pinned comment, click the link to join our Telegram channels. You'll get updates to all of my analysis, information, data, charts, videos, so much more. Here it is over here. And of course, if you're interested in our VIP channel, you can see all our VIP results here since February 2021. When you click on a random date over here, it take you to what our trades were. You can see 23 trades, 3 losses, blah, 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 are our results. And if you want to join the VIP, you can get access to the VIP. We've got over 500 members. Here's the VIP channel here. Post a whole bunch of trades. You can see each trade setup, for example, this one here has specific targets, entries, stop losses, gains, all that kind of stuff. And you can see the results over here. And you'll get access to our group chat where we post a whole bunch of other stuff in there. Everyone's talking, everyone's chatting, everyone's looking for trades. Anyway, more information on that in the Telegram channel. Let's get back into it. So where would we go if we break up? And this is where we need to kind of cross-analyze things. This is where it gets a little tricky. I feel like this is where people get confused when it comes to technical analysis. They look at one individual data set and they say, okay, how is this data set going to influence the price? And then they say, okay, if this breaks up, Bitcoin's going to go up. Okay, but it's not as clear cut as that. It's really not as clear cut as that. We have to use data points or data sets to create almost narratives and create directional biases, and then use other points of information to either rebut those biases or confirm those biases. And then when we have those biases confirmed, we can go ahead and look at structural levels and see where those directional moves are going to take us. So there's like a 3-step process I like to use. It's 1, I usually do it the other way around. I identify structures and horizontals, okay? I identify my zones, okay? 2, I identify my volume zones, historical volume zones. Where is there going to be a lot of resistance? Where is there not going to be a lot of resistance in specific ranges? And then 3, I take a look at my technicals and I see how the price is actually looking in terms of strength. And the reason we use technical indicators isn't to enter trades. You can do so, you can use those to enter trade, but in general, we use technical indicators to gauge the strength of a trend. So when we have positive, or should we say we have the price action over multiple moving averages, it can suggest strength on those moving averages. Right now, we can see the prices on the weekly is only above the 4 moving average. So on the weekly chart, it is not showing a lot of strength, okay? We have basically every moving average from 5 and above, or 6 and above the price action, which is indicating a significant downtrend. Now, obviously, these moving averages are quite lagging, so on a larger time frame, they're going to reflect differently to as if we went down to, say, a 3-day chart. You're going to see how now we are pushing above mostly the 3, mostly the 15, the 17, and even the 22 and 26 moving average. So they do act a little bit different depending on time frame on. And it's important to be able to analyze data, extrapolate it for one time frame, and understand the implications on a larger time frame or a smaller time frame. Here's an example. On the weekly chart, the RSI had not broken out. On the 3-day chart, we have broken out. So then, isn't that a breakout? Well, no, it's not a breakout because we're not looking for it on the 3-day, we're looking for it on a weekly. So remember, when you have a combination or a continued effect on a smaller time frame, it will eventually translate to the weekly. So because it hasn't broken out on the weekly of a larger time frame, this 3-day break has to be considered not sustained or not strong enough to actually translate that information to a larger time frame and have a larger time frame effect. Therefore, we actually ignore this right here and we assume this is nothing more than just noise, okay? So it's very important that you can identify when doing technical analysis what data is relevant and what data is irrelevant, because if you take all data in consideration exactly the same weight, you're going to confuse yourself beyond belief and you're never going to get anywhere with it, okay? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So what are we looking for here, guys? We're looking for a break on the weekly. At the same time, we're looking for a 2-day candle above this 50 SMA, okay? I'd really like to see a 2-day candle above the 50 SMA. Now, a 50 SMA is not historically an amazing moving average to predict overall trend shifts, but it can predict and it can influence shorter time frame trend flips, or should I say, shifts in the overall strength of the trend. What we're looking for horizontal breaks, okay, so zone breaks. We're looking for shifts in the trend, which will represent as EMA breaks, and we're looking for momentum triggers or momentum shifts, which is represented by the RSI. So we're looking for a weekly above the RSI resistance, we're looking for a 2-day above the 50 SMA, and we're looking for the price to get above, like we talked about yesterday, the $20,800 resistance zone, which is that representing that horizontal resistance range. The price should end up around 21,500 when all those three things have been accounted for. That is pretty much it, guys. For the upside, if we do break to the upside, well, we've talked about this a lot. We'll talk about it real quickly. Where is that next target? Where can Bitcoin go? It is very simple. We look at the next resistance range. There's no reason to believe Bitcoin will not make it to the next major resistance if we have positive strength, or we have the trend strength flip, being that 50 SMA break. We have major horizontal resistance that we've been under for months break, and we have momentum shift out of a 665-day trend. There's no reason why Bitcoin could not take that strength and push upwards into this $22,000 to $24,000 range if those validations are met. And of course, we're going to talk about why and what could potentially limit those validations being met in just a moment. So that is what we expect, okay? Looking from the strength, or should I say historical trading volume at these ranges, you can see it starts to taper. You can see it starts to taper, and you can really see it tapers off massively from about 24,000 all the way up to into this $30,000 range even. This huge taper, meaning that this area is an area of low resistance. It's an area of low resistance because we don't have a lot of historical trading volume in that range. And if we don't have a lot of historical trading volume, we don't have enough price action in that range to actually create any supports or resistances. That doesn't mean we can't create resistances and supports in this range. It just means going into that range, there is no supports and resistances to initially worry about. And therefore we have to assume that we could potentially clear this range with relative ease in comparison to what we would experience moving through a range that has significantly higher historical trading volume, such as this $18,000 to $20,000 level, okay? So to the downside, guys, obviously there is a very good chance this fails and drops to the downside. And, you know, looking at the price action now, looking at the way the economy is going, looking at the results we got from the FOMC, it is possible that this continues down. And if we do continue down, well, we're looking for, again, points of validation on the RSI, okay, horizontal levels that could trigger collapses. And we're talking about triggering collapses because price follows momentum. So we can find points that would signify significant shifts in momentum. We can extrapolate that to the chart and then look for similar points on the price action of where those triggers could take us and actually take place. So looking on the chart, where would be these levels? Well, we're looking for a few points. The first one would be 34.34 on the RSI, and this is obviously going to be on the larger time frame. We're looking for on about a 3-day chart, so a 33.34 on RSI. You can see just historically, just in the last few years, we can extrapolate this back all the way back, but just in the last few years, every single time we break through this level, you can see we have significant drop downs, okay? We found support on here, that was our bottom, we bounced up, okay? We lost this level again, significant drop down, right? Just temporarily, and once again, all the way back over here in April, we did actually, in matter of fact, lose this level again, and that sent us into another significant drop down. So we're looking for that level as a trigger point for a collapse, even as soon as August 13th, this crash in August 13th we actually lost that level again. So this level is a key point on the larger time frame. We're looking at a weekly. We can look on a 3-day and go down to about 31 on the RSI on a 3-day. That will indicate these points of momentum shift. Now, what would occur if Bitcoin lost that level again? Well, we can assume that if Bitcoin on a weekly loses that point on the RSI on the weekly, meaning a weekly close below the 34.34, Bitcoin is likely to continue downwards and close below 18,400. Now, if Bitcoin loses 18,400, we already know 18,400. If you're not new to the channel, you would know already. If you're new to the channel, 18,400 is the trigger, the bearish trigger, which will result in a collapse back to that all-time low, that low on Bitcoin at 17,600. Okay, really, really simple stuff. Now, if you're looking at the RSI, I'll leave the video at this last thing. If you look at the RSI, how RSI candles move, they move a little bit different, okay? But they're a linear chart. So you have I'm gonna go ahead and draw it out. You have basically a pivot point. So you have, this is your individual point here. We're gonna go draw it out. This is your weekly open, okay? Weekly open and close, okay? Then you have your time period throughout this week, and then this is your next weekly close point, okay? Now, the RSI can shift up, down, sideways throughout that week. But it doesn't really matter how it shifts throughout the week, whether it closes below that 34.34 or whether it goes below it and then goes back above or goes sideways. It doesn't matter. It's what matters is where that next point pivots to. So then it will stop there and then it will pivot from this point again, whether it goes up, down, sideways, and pivot, and it kind of moves in pivots. So we're not concerned about a dip below it. We're concerned about when that pivot lands below it on the weekly, okay? I'm gonna leave it there, guys. I hope you enjoyed the video. If you've got any questions, leave them in the comments. Once again, it's always a pleasure doing videos. I really, really enjoy it for you guys, and I hope you find this content useful. Go ahead and sign up to Bitget. You're really, really watching the thing. Sign up to Bitget, trade on Bitget. It supports me, it supports the channel, and it, you know, well, nothing else to say, guys. It's probably the best place to be, okay? So with that being said, I'll see you guys tomorrow. Cheers.